How do you judge your own performance? What do you base it on? Volatility, drawdown per month?
For me, I judge it overall as how much money have I made at the end of the year, because ultimately none of us came into this for the fun of it. We came in it for the money. So how profitable by the end of the year? What I will assess on a monthly basis is drawdown, it's trade frequency. So a theoretical kind of correlation is, if I'm having a bad month, quite often, as my origins are a revenge trader. So if I lose, I have a tendency to want to get into the market. And I've worked on that and curbed it, but when I started out, if I had 2 losing trades in the morning, it was almost guaranteed that I would have 5 or 6 trades in that afternoon. So I will look at things like trade frequency. So I look at where my trade frequency is, as I'm averaging about 1.5 to 2 trades a day. If there's a spike in my trade frequency, that could just be because there were more opportunities, but I will look at that spike and go, oh, interesting, was there a losing run prior to that? So I'll look at things like that. I will assess my drawdown, because over the years I've conditioned myself, because I'm using discretion and strategy, to have relatively low drawdowns. So for me, if I'm having a 10% drawdown in a month is a fairly hefty loss for me. So I know that because I'm conditioned not to have that, if I have that, that could affect me psychologically.
What's been your biggest setback today, and how did you get over it?
Interesting. There's 2 that I think blowing an account. I think in the time when I started out, I blew an account fairly quickly. I think it was less than 2 months. That's a setback, and at the time, that is a significant setback. But
What size was the account?
5,000.
Right.
So, but
Yeah.
again, the amounts are relevant, because it was all the money I had.
Yeah.
So I know traders that have blown 60, 70 in their first go, but they had 300 grand lying around. So in terms of, they've still got cash to play with. I literally blew everything that I had. So I think that was significant, and in the moment that was extremely challenging, but it's something I learned from. It's a bit like the businessman who goes bankrupt. The worst thing you can do is not get back up. So I'm not saying everybody has to blow an account to be successful, but there is a theme to lots of traders that have been through that process, or had a heavy drawdown, because it forces you to reassess the simple fact that you are not in control. You're in control of your trade, you're in control of your strategy, but you're not in control of the market. And you can say that to anyone and they'll logically nod their head, but will their behavior actually dictate that? And I think recently, it was about 2.5 years ago, we as a collective have been testing a mechanical strategy that worked very well and still does work very well on position trades. So we trade it once a month, and we adapted it for day trades. So we thought this is a great sort of set and forget scenario, so you can trade as a day trader. And I saw the drawdown, so we looked at it and said, well, this is great. So you put the trade on at 8. It doesn't take a lot of work. Well, the cost of that is that you're going to hit greater drawdowns than I do with my normal day trading. So I knew that logically, but when I started trading with it, I really struggled with the fact that I was seeing drawdowns getting bigger and bigger and bigger. And it wasn't until, I knew it logically, but then it made me realize, actually, as a trader, I've really conditioned myself to not have huge drawdowns, that actually trading this way doesn't work for me. But I allocated a sum of money to it, so it wasn't like I'd thrown everything in on this new strategy. So even now, after 15 years, I still have insights and learnings, and things don't always go exactly as I want.